Good morning, everybody. My name's Sam Metcalfe. I'm the Midlands editor of thebusinessdesk.com. Hope you're keeping well and staying safe. I'd like to welcome you this morning to our Covid-19 Helping Businesses Survive and Thrive seminar in conjunction with Begbies Traynor. I think we all know the last few weeks has been somewhat turbulent for businesses in the West Midlands. Over the next half an hour, 40 minutes or so, with the help of our expert panel, we're going to try and cut through the white noise and give you some straightforward advice to ensure your business not only gets through to normality, but is also in the best position possible to ensure to take advantage of the opportunities that will undoubtedly present themselves when lockdown is finally lifted. At thebusinessdesk.com, we've spoken to many business owners over the last few weeks, and what they wanted more than anything is sound advice and what help is available and what to do next. And that's our mission today. I'm going to ask our panel to accept it, and without further ado, introduce themselves now. Julie.
Yeah, hi everybody. My name is Julie Palmer. I'm the Regional Managing Partner for the Southwest region of Begbies Traynor.
Mark.
Good morning, everybody. Mark Malone. I'm a partner in the Birmingham office. Also spent time in other regional offices such as Worcester and Cheltenham.
Thanks, Mark. And Gareth.
Yeah, I'm Gareth Prince. I'm also a partner in the Birmingham office alongside Mark, and so covering Birmingham and the West Midlands, and also pushing up into sort of Staffordshire, Burton-on-Trent, that sort of way. So trying to cover the Birmingham Midlands region.
Thanks very much, Gareth. And last but by no means least, Bob.
Hi, I'm from the Staffordshire office. I've spent over 40 years as an insolvency and turnaround practitioner for people like the official receiver, PricewaterhouseCoopers, and for 10 years I headed up the Begbies Traynor office in Staffordshire. I thought I'd managed to retire a couple of years ago, but I've been asked to come back by Di Dunyan and her excellent team in Staffordshire. That's what I'm doing.
Well, welcome back, Bob.
Thank you.
Just a reminder to all our guests today, if you have a question for the panelists, there's a Q&A button at the bottom of your screen. So do submit a question. We'll try and get to you. If we don't have time to get through them all today, we'll be providing you a way to contact our panel after today's events. Okay, we'll kick off with the first question to you all, but for Julie first, really. In general terms then, Julie, how are businesses coping with what is really a completely unprecedented challenge, isn't it?
It's an unfolding story. I mean, we often say that a week is a long time in politics, but at the moment, I think an hour is a long time in politics, such as the speed at which events are happening before our eyes. I think initially, if we go down to the lockdown, which was just over 2 weeks ago, I think everybody reeled in shock a little bit, although we'd seen the events unfolding in Asia, and then more importantly, in our sort of nearer neighbours in Italy and Spain. I think it was still a bit of a shock to the country when the lockdown came with the speed at which it happened. My impression is for the first sort of 2 or 3 days, everyone sort of reeled from that shock and learned a new way to do business, including ourselves working remotely where possible to keep the team safe. I think now as each day has unfolded, things have begun to settle down to a new normality. We don't know how long this new normality is going to ensue at the moment. The indicators at the moment seem to be that Easter Monday is going to be too soon to say if the lockdown can ease. Based on what's happening in Italy and Spain, I'd guess that probably the lockdown is going to continue in some form throughout April. And at that point in time, I think the economic crisis begins to become almost larger than the health crisis. Hopefully by that stage, we've equipped the NHS in terms of being able to deal with the numbers that we're now predicting. We can manage the health crisis, albeit we still think we're going to be somewhere around 20,000 deaths seems to be what's being talked about. But the economic crisis is obviously looming more and more now on a daily basis. Predictions range from anything from 15% drop in GDP to 30% drop in GDP. We're seeing many industries just completely decimated at the moment. They just don't have cash. The government support measures are there, but some of them, for example, furlough, are working pretty well. But other measures, including the lending schemes, been a lot of criticisms about that in terms of whether money is actually getting to business at the moment. It remains to be seen whether money will get to business quickly enough to see them through this lockdown period. And I think we are starting to see increased distress levels there. Haven't really come through yet in terms of an increase in insolvencies, but I think that is going to come. And even before this crisis, we were showing about 500,000 businesses showing signs of significant distress, which, to put that in context, is about 1 in 6 UK businesses. A number of those will be the zombies that we'd seen marching on since the financial crisis. And I think this pandemic could be the thing that puts a lot of those businesses down. But hopefully all the various support measures will keep the businesses that didn't have viability issues alive to come out the other side and hopefully prosper going forward.
Thank you, Julie. Mark, what are you seeing?
Yeah, we're just echoing how Julie concluded there. We're talking to lots of business owners, and it's across all variety of sectors. So there's no particular sector. Having said that, naturally the impact has been quite great in the leisure and hospitality sectors, and it's a case of signposting some of those schemes that are available, and again, as Julie's mentioned a moment ago, it's how quickly those schemes can be accessed. So it is difficult times, and at the moment, what we're doing is helping those business owners that are calling us to signpost and get them into hopefully the right places to get the schemes and the funds and the things that are available for them to continue.
Okay. Then Gareth.
Yeah, so I think a lot of businesses are able to mothball during this period because of the help that's available. But we do expect to see, a rise in distress, because inevitably this money is going to need to be paid back at some point. So you can get time from suppliers and from HMRC and that sort of thing. But ultimately, businesses will have to come through this somehow, and the damage will be significant for a significant number of them. Obviously, from a local point of view, Jaguar Land Rover and the likes and their supply chain closed down since the end of March, and no real sign of being able to open certainly this month, maybe into next. And so the impact on the supply chain will be significant. But of course, you do then hear other stories about manufacturers turning their attentions to supporting the ventilator challenge and things like that. So there are some positives coming out of it. And as Mark said, we're able to signpost people and try and help them through this period.
Bob, this is a strange time to come back to Begbies then for you. What are you seeing?
Well, we're seeing the same problems that everyone else is seeing, but particularly non-food retail businesses, hospitality, pubs, hotels, leisure, really, really struggling. And most manufacturers on our patch have had to close. One of the, I suppose, peculiarities about Staffordshire is obviously the pottery businesses. The potteries have a lot of suppliers who supply not just the clay, but engineers who service the kilns and provide the parts, the decorators. We've also got a big leisure sector up here with Alton Towers, and I suppose a bit further south of the region, Drayton Manor, and those are closed. And all the people who supply those with everything from food and the thousands of employees that work for them, they're all really, really struggling. So I think sector-wise, those are the ones we've particularly spoken to so far. Construction's interesting because it's a bit hit and miss, but even those who are managing to survive, what we're now seeing is that they can't get supplies because, say, the window manufacturers aren't manufacturing the windows, even if you've put the shell in. So that's really what we're seeing, which I guess applies sector-wide, but in Staffordshire, we've got our own peculiarities with the pottery industry and things like that.
Yeah. Okay. You've all mentioned some of the government schemes, and the Chancellor got plaudits a couple of weeks ago for the bold package of schemes, but since then there's been a bit of confusion, hasn't there? And I've certainly heard anecdotal delays around the coronavirus business interruption loan scheme. Bob, we've got a few questions on this already as well. But Bob, what's the best advice you can give to businesses looking to government for help right now?
Well, I think the government I think the Chancellor was quite impressive in announcing all these schemes very quickly. The problem, of course, is that there wasn't time to build up the detail around them. So as Julie's already said, there have been particular problems with the business interruption loan scheme. I'll come back to that in a minute. I think what is excellent is the tax deferral schemes for PAYE, VAT, and so on, and all types of taxes. So that ought to aid with tax flow, with cash flow somewhat. And some of those are for 3 months, some of those for a longer period. I think that will help. Also for smaller businesses, we've got a lot of SME companies. I suppose for Begbies Traynor, SME companies are our core clients. It's the suppliers to the JLRs, the JCBs. And a lot of those are quite small SMEs. Many of them are, if they were entitled to business rate relief, will be entitled to the grant. Now, I know one business I've been advising, the local authority have already contacted them to say, you're entitled to this automatically, what are your bank details? So I think the government and local authorities are doing their very best to get money to people quickly. I think the furlough scheme is excellent. It's a shame that it doesn't put money in people's bank accounts, businesses' bank accounts more quickly, but I think it is an excellent scheme to keep people on and hopefully weather the storm rather than making people redundant. Coming back to the funding scheme, the business interruption loan scheme, I know there has been criticism, but you know, the banks are in a difficult place as well, because they've been given mixed messages, I think, by the business, by the British Business Bank. And the problem that they've got is that they're being told, yes, get the money out quickly, but it must meet your normal lending criteria, i.e. it must be a viable business, one that's going to be capable of paying that back. Now who knows? Banks are very good at analysing that in normal times, but they've got two problems. One is these aren't normal times, and two is that the volume of calls. I think the chief executive of NatWest, I saw on the TV last night, saying they normally get 3,000 calls a day to their call centre. They're currently getting, I think it was 28,000 a day. So they are, like everyone else, trying to ramp up to deal with it. I think my advice to small businesses who need access to that interruption loan scheme is keep going. I think the banks are getting their heads around it. They are trying very, very hard to help. And it's not just the big banks. There are some specialist lenders. If you look at the list of 40 lenders, there are people like the Black Country Reinvestment Society, as they used to be known, BCRS, and they can tend to be a bit more flexible and fleet of foot than some of the others. So if you've been unsuccessful so far, what I would say to businesses, if you need that cash flow interruption help, keep going.
Okay, we've had a question about this, looking a bit further forward. I don't know who wants to take this, if you want to take it, Bob, or somebody else. It's from Daniel. It says, the current furlough scheme continues to support businesses until the end of May. Do any of you have any insights as to whether or not this will be extended, or is it only for certain industries or sectors?
My feeling is it will continue, but Gareth, do you want to take that on?
Well, yeah, the Chancellor did say that he would extend these measures for as long as necessary, and I think you can only take him at his word on that. The government does seem to be fully prepared to stand behind these measures, and as Bob said, really, that furloughing scheme took everyone by surprise, really. I think when it was first announced, it was a very generous scheme, and it does seem to be making a big difference. So I can see them extending that if the lockdown continues, as Julie suggested, you know, and I think we all believe that the lockdown will continue through April and beyond, maybe.
We're hearing a lot about, you know, actual practicalities. And we've got another question here, an anonymous question, is when you claim furlough money, do you pay your employees with your company money and then claim the money back? Or do you apply for the money from HMRC beforehand? Anybody want to give some insight there? Gareth?
Well, I think obviously that it's by negotiation with your employees. You can't just force somebody to be furloughed. You have to negotiate and agree that with them. Now, if you agree with them that they'll wait for their money, that's another thing as well. But of course, if as an employer, you can't just change their employment terms. So you, strictly speaking, you need to keep paying them as normal. And that's where some of the confusion has arisen around this in terms of the 80% and how that needs to be paid to the employees. But as I say, that the most important thing to bear in mind is that it needs to be by negotiation. You can't just enforce furlough on your staff.
I think there's a reputational thing here as well. If you recall the fuss over Wetherspoons, they put a lot of staff on furlough when they had to close their pubs. And they said to their staff initially, we'll pay you when we get the money. And they got into such hot water over that. Tim Martin, who runs it, quickly changed his mind and said, okay, we'll do the right thing, we'll pay you now. So if you possibly can, I'd advise any business to keep paying their employees, or as Gareth said, come to some sort of accommodation, a voluntary arrangement with them if you possibly can.
Okay. Talking of cash, Mark, in normal times, there's the old saying, isn't there, cash is vanity, profit is sanity. Is that been turned on its head now? Is cash now king, and is it a priority for SMEs to conserve cash, do you think? If so, what are the best ways for them to do that?
Yeah, without a question, cash is the focus at the moment, more so than profitability. Certainly the business owners, management teams, directors that we're speaking to, we are emphasising the importance of cash flow forecasting in the short term. We talk about the 13-week forecast, ideally on a rolling basis. The reason we use 13 weeks is because it should cover most financial figures. So you'll have weeklies, monthlies and quarterlies. Now, as has been said previously, and as we all know, these are very, very unusual and uncertain times. So it is difficult to forecast. However, and again, speaking about the advice that I'm giving to business owners at the moment, if you are forecasting, we do recommend that maybe if you forecast on a normal basis at the moment, and then make adjustments for the impact that this virus is having on your business. So you might defer or remove receipts that you would ordinarily expect to receive from customers, push back payments, and again, look to introduce some of the support that the government is offering. Again, as Gareth, Bob and Julie have mentioned, VAT deferrals, time to pay on your PAYE. You can look at the job retention scheme, furloughing of staff, and build those into your cash flow. But importantly, you have much better visibility and clarity, which is going to help you communicate to your stakeholders in your business, your suppliers, your customers, and also importantly in these times. And again, what we don't know is how long this will run for. We don't know what the impact will be on all businesses. So at the moment, documenting the decisions that you're taking in relation to perhaps payments that you may making and payments that you're not making and deferring is perhaps even more important than ever. So I think use that tool and apply reasonable adjustments would be my advice.
Okay, just drilling down into one thing you mentioned there, I've got another question here around delayed VAT or national insurance payments. So the question is, what kind of time to pay agreements can companies expect tenure-wise from HMRC from delayed VAT or national insurance payments? 6 months, 12 months or longer? What is the noise at this stage coming from HMRC?
Well, I think it will vary, and again, this goes back to the importance of having some forecast to provide HMRC if it gets to that. But I think we would expect to see six months. As I say, it will vary on a case by case basis. But obviously, the VAT deferral scheme is already well publicised in terms of the 2 quarters that you won't be making, and importantly as well. And I think the Crown HMRC have publicised this certainly on their website. But if you pay by direct debit and you are looking for time to pay and you're struggling to get through to HMRC at the moment, which many people are because clearly they're very busy, then maybe you consider what you do with the direct debit and whether you stop that direct debit and then look to enter into that discussion with HMRC. So at least at that point you are controlling your cash flow as required.
Okay. Bob, one more for you, just quickly before we move on. Martin's asked, can you apply to more than one lender for 250k business interruption loan to keep each loan below the value, which does not require a personal guarantee?
Yes, I believe you can. I would recommend you go to your own bank first because they know you best. But that doesn't stop you going to the others. And it's not just invoice financiers, asset financiers as well. And I think you can get these things running concurrently without affecting your credit record, your credit rating. So I think you should give that a go and talk to 1 or 2 suppliers if you can and see who seem to have the most time to deal with it. I think that's a big thing. And just coming back to the time to pay, and Mark mentioned the specific announcements that have been made on VAT, but there's also 6-month deferral on self-assessment. But if you need a more general time to pay any form of tax, if you've got arrears of tax, the Revenue have implied, at least, that they'll look at agreements for up to 12 months. Normally, you can negotiate that yourself, but if you feel you need a bit of help, I'd advise you to get your accountant involved, or failing that, we'd be happy to help. We've got a lot of experience of putting schemes to the Revenue in a way that they're more likely to accept. So you know, use professional advice as well.
Okay, thanks, Bob. And Gareth, if I can come to you, we're all sat at home at the minute, but normally we'd be sat in offices, wouldn't we? Can we talk about the issues surrounding where businesses operate from? In your experience, are landlords being accommodating over initiatives like emergency rent-free periods at all?
Yeah, that's certainly what we're seeing. You know, those early days we were receiving sort of quite panicky calls, you know, how are we going to deal with this sort of thing? And by the time you actually sit around and talk through things, you know, business owners have already spoken to their landlord and that sort of thing, and obtained that sort of time to pay. Obviously, we talk about the government support that's available, so dealing with employees, dealing with tax. One of the next big things behind that, of course, is rent for a lot of businesses. So, you know, I think people are being proactive in terms of having those discussions with their landlords and obtaining that time. One of the less publicised aspects of the government support has been a block on commercial tenant evictions for 3 months, which obviously will help steer those conversations. But of course, you'd rather have an agreement, consensual agreement with the landlord to defer rent payments in that period. Otherwise, at the end of 3 months, they're just going to want their money back to the point was made before, really. That it's just storing up problems for the future. But at this time, that does seem to be the experience that we're seeing, that landlords are being accommodating. But as you touch on there as well, this will cause problems for landlords as well. And it's easy to forget that a lot of those landlords are small businesses themselves, private landlords that will have their own pressures, commercial mortgages to pay on those properties, and then a loss of income. And then longer term, you know, the impact of people perhaps reassessing how they work and reducing demand for those expensive office spaces. So it's yet to be seen how this will affect working patterns, really.
Gareth, I'm going to come back to you in a moment. Julie, I've got quite an interesting question coming here. Another anonymous one. As a company who employs more than 500 staff with a turnover of 15 million, we cannot claim SSP back because we are not classed as an SME. Do you foresee the SME definition being relaxed for companies of our size, being able to, and so they can claim back the SSP in the near future? Is that something that might happen, do you think?
I think so. This picture is unfolding very quickly, and I think the various schemes that have been rolled out, as was intimated before, the conceptual side of the scheme has been rolled out, but the detail necessarily hasn't been looked at underneath. And it's only when people are applying and finding the deficiencies, either on a corporate or a personal level. So we saw the same thing with furlough, whether the self-employed were covered or not. We're seeing these same gaps on the corporate landscape at the moment. And I think what's happening as the deficiencies in the various schemes come to light, there's further reaction then to try and fill the gaps so that everybody is treated fairly. And what we had is we had that sort of cut-off point between the business interruption loan scheme and the corporate finance lending scheme, and there were certain businesses that sat in the middle. Whichever scheme has been rolled out, we've seen these deficiencies in terms of when we look at the detail, it doesn't necessarily capture the people that it's intended to, but we're only finding that out as these deficiencies become apparent. So I think then there are movements to say, actually, we missed that first time round. We're now going to amend it to try and make sure that we capture those businesses. So I think there is a recognition that the help that's there, what the government's trying to do is to ensure that's available for all, but they are having to react to this as it happens on a daily basis, including the businesses that are not really qualifying in the way that the government thought that they would do within the schemes that they rolled out.
Hey, Gareth, back to you again. Apart from all this and the details, what actual options are there for business owners to restructure their businesses at the moment? How difficult is that? Is that more difficult in this current climate than it would be in whatever normality is?
Yeah, well, it can be. Obviously, you know, we talk about the the existing tools that we have, the sort of company voluntary arrangements, for example, which I'm sure a lot of people are familiar with, but that's effectively a formal agreement between the company and its creditors to repay them in full or in part over a period of time. So it's a negotiation really, and that's normally based on cash flow forecasts and what cash would be coming into the business. Back to Mark's point really about forecasting then, that does make it difficult to forecast and to set out a proposal. But it's certainly something that is possible in these times. And it allows an underlying good business to survive the challenges that it's facing. So, businesses will be struggling with debt at the moment, but a company voluntary arrangement can be a mechanism to buy time to free itself of some of the debt and allow that underlying good business to survive. As more of a heavy touch is administration, of course, a protection that can be put around a company to prevent action being taken against it. We've already seen that, obviously well publicised appointments over the last few weeks. Debenhams, as an example, in the last couple of days, a business that was already struggling anyway, but then has had what they call a light touch administration applied to allow it to mothball properly. So we'll see whether that becomes more of a popular sort of thing. And of course, in the background, again, less well publicised, the government's trying to bring forward existing plans that they had to change the sort of toolkit that we have available to us. And one of the most notable ones was sort of advancing the idea of a general moratorium for companies to allow them breathing space to restructure, to come up with a restructuring plan. And that would apply to all companies. There has been a similar sort of scheme out there, but it's rarely used for a number of reasons, which are not really relevant today. But they're talking about bringing that in and rolling out a general moratorium for companies to enable them to restructure. So that could be an interesting toolkit, but we're yet to see the plans around that or the full details around it. And it will also be a bit delayed as well because it needs to be enacted by Parliament. And of course, Parliament's not sitting at the moment. So that is yet to come.
Okay. Mark, I've heard anecdotal evidence again from directors who possibly only pay themselves dividends each year, and that they're kind of falling through through a loophole really. What advice would you give to them? And who are really, they see themselves caught between trying to keep their business running and conserving cash, don't they? What advice would you give to directors of very small companies?
Sorry, Sam, you broke up there. Advice to conserve cash. So
yeah, to directors who possibly only pay themselves dividends, they feel like they're falling through the trapdoor a little bit with this, I think.
Yeah, and it obviously it is difficult, and the picture keeps changing by the day. I think general advice, and I'm repeating some of what we've discussed, is communication and gaining trust with your other stakeholders. So your employees. So if you are going through that job retention scheme, then obviously gaining their trust and regular communication. I think eliminating any unnecessary expenditure needs to be considered carefully. Obviously, if you can, you look at cancelling or maybe postponing any contracts or subscriptions that you would ordinarily have in the routine course of business, or maybe just discuss reduced terms and again ease the pressure on your cash flow so that you can take a drawing, particularly for those very, very small businesses. Gareth mentioned discussions with landlords, whether that can release cash and deferring or at least reducing those payments. And again, we refer back to the schemes and whether it is right to seek to introduce debt that's then government backed. There's no easy answers, unfortunately, particularly for that particular category of business owners where they rely on those dividends. But hopefully some of those measures will enable the cash flow to be preserved to such an extent that they can continue and survive in these very difficult weeks that still are to come.
Sam, just to add to that,
okay.
Most directors have a small PAYE income in addition to their dividends. And if they can't work at the moment, realistically, they're not actually running the business, they are entitled to be furloughed themselves, surprisingly. And in terms of personal outgoings, of course, directors are people like the rest of us. They've got mortgages and bills to pay, and they can take advantage of the 3-month mortgage holiday and things like that.
Okay, that's good advice. Julie, we've got a question that's emailed in from Michael. We're encountering cash flow problems with some customers shut down and others simply choosing not to pay. Is there any point in taking legal action, or are the courts so overloaded that they will refuse to take additional cases during the present crisis? Are courts even meeting, Julie?
I think the thing with the courts at the moment is they are still dealing with cases. They're preferring to do them by video link where possible. They will also deal with emergency applications. So the legal answer is yes, you can still go through the courts, but I think you need to balance that against the commerciality. Look at a business that you're pursuing money from. If by taking this action, are you going to put them out of business, and what does that mean in terms of the outcome? It's a bad time to put a business down because probably its cash reserves are as low as they've probably been. It's not an easy environment to sell assets in, so even if the business had some worth, it's probably now worth less than it was a few weeks ago. So in taking action to put that business down, commercially, are you just ensuring that you're going to be one of a very long queue of people that's probably going to get very little return, if indeed no return whatsoever? Or alternatively, by supporting that business and try and keep it going, not extending that line of credit, but keeping it open and not taking legal action, will you come out of the other side with an operational business that might be able to prosper going forward? So there's a legal question, yes you can, but I think commercially the question is more important. Does that actually get you anything at the moment, or is it better to just hold your nerve and see if that's going to be a business that you can trade with going forward? Both get your money back and have the benefit of earning future profits with your trade with that business going forward. So a little bit of a balance there. Yes, you can, the courts will hear it, but do you want to commercially? Is that the right thing to do at the moment for your own business?
Okay, we've got lots of questions flooding in. Thanks, Julie. Another one here, I don't know who wants to put a hand up for this. It's, can you explain the changes in the test of solvency and director's liability for wrongful trading?
I'll jump in there if that's okay, because I've just been talking, so I'll add it on to what I've just said. The thing to remember about wrongful trading is it's always been a very difficult action for an insolvency practitioner to bring anyway. It's an expensive action to bring. Cases are quite rare for that reason. So wrongful trading was an unusual animal anyway. The risk of wrongful trading for directors, though, is it does pierce that corporate veil and can hold them personally liable if an insolvency practitioner brings successful action. The personal liability can actually go into the director's own assets to make good the position. Actions were rare, but the reality of the current situation, I think, has been recognised very quickly to say we need to relax even the rules that did exist previously on wrongful trading. Directors are having to react quickly on unprecedented times and make decisions that they might not be used to making. The decisions that they're now making mightn't have been reasonable a few months ago, in a sense that they are now reasonable. So the view is that wrongful trading, the provisions will relax during the period of the lockdown and the pandemic.
Okay.
And then when we come out,
We're losing Julie a bit there, yeah. Okay, we've got a question here about, thank you Julie, you're back. We've got a question here about from a company who's just taken a new member of staff on, and the previous employer won't take that person back on. Is there any help for the business owner here now that the employee cannot be furloughed?
Yeah, well, I'll take that one. There's a friend of mine who's caught up in a very similar situation, so left a job just before the 28th or 29th of February cut-off for the furloughing scheme, started a new job, and of course has been let go by his current employer. So has found himself caught between those two stools, really. And but I have heard it is gaining traction. I think there's a number of people that have been caught in that situation. Of course, the obvious thing to do is go back to your previous employer, I think as the question suggests, and ask if you can be re-employed and then furloughed immediately, which is acceptable in the rules as far as we understand. But of course, that's not, from a practical point of view, it's not always going to be acceptable for your previous employer to do that. It's a big ask to ask them to do that. But as Julie highlighted earlier on as well, the government does seem to be fairly fleet of foot at the moment, and maybe will recognise if there are a number of people that have been caught up in this situation, fairly genuine circumstances, then hopefully they can be looked after as well. But at the moment, I don't believe there's any additional assistance. But I think it may be just on a case-by-case basis. Hopefully, the government will, or HMRC will look at individual cases where there are genuine circumstances.
Thanks, Gareth. I think we all want to know the answer to this one. It's another question from our guests. And to help with cash flow, other than being stricter about chasing outstanding debt, are there any other initiatives which are working well to get cash in more quickly? Who wants to take that one?
Well, there's the grants that we've spoken about, that are available in certain sectors that again, I think are being processed, but they're taking some time. I did read earlier today about the communication with local authorities, and just a point to note that local authorities are writing to registered offices or trading addresses, and often, because people are working there remotely, that correspondence isn't being picked up. So if you are expecting something of that nature, then it's worth chasing the council yourself, or at least monitoring where she's going at the moment.
Okay, we'll take one more question. It's from Alan. Surely directors will still be personally liable for dividends taken if the profit is not in the company at the end of the company's financial year, and therefore will directors be advised not to take dividends at this time? Julie.
Sorry, do you want me to jump in there? Yeah, I think that is the case, actually. I mean, the relaxation on wrongful trading is under the insolvency legislation. The rules regarding dividends, distributable reserves are under the various Companies Acts. So yes, that is the case. The question still is, are there sufficient profits, are there sufficient reserves to enable those dividends to be taken in normal times? And even though these are abnormal times, those tests still exist. So directors should be mindful, they should speak to their accountant to make sure those reserves are in place so the dividends can be taken properly.
Okay, let's look to the future finally then, everyone. Julie, to start with, how do you see SMEs and other businesses emerging from this? What will a brave new world look like? And do you think businesses will change fundamentally, or business owners?
I think the big question at the moment is, I liken this a little bit to a war. We are almost in warlike times at the moment. As with a war, it's a really dangerous period when you're in the war, but I think people sometimes forget that it's the period when you're emerging from a war that is actually really dangerous. And I think that's going to be a really suitable analogy here for businesses. The government support measures are very much focused on managing this crisis at the moment. I think the big test will be, can we actually manage the economic crisis that's looming? And to what extent can we continue to offer those measures to businesses as we emerge from this crisis? That's going to be the real test, I think, in terms of the survival of business out there. There are some fairly extreme predictions in the last week or so of anything up to 1 million businesses failing. To put that in context, we normally see about 20,000 corporate failures a year, give or take a couple of thousand either side. So even if 10% of those predictions came good, that would mean we would see insolvencies at about 5 times the normal rate, which is going to be very difficult even for ourselves as a profession to manage. But I come back to the fact that the key point, I believe, is when these measures start easing off, that is going to be the really, really critical time for business. And that's when all of these support measures need to continue in some form, just to try and keep as many, particularly of these viable businesses, alive coming out of this crisis as we can do.
Okay. Bob, just finally from you, what's the one positive thing that businesses can hang on to at the moment?
Well, that many, if not all, businesses are in the same position. So you're not on your own. There is support, and there's more support that's being made available. There's professional advice that's available to even, as we said right at the outset, act as a signpost, if nothing else at the moment. So I think it's accepting that these circumstances are unprecedented, that many all are in the same boat, and that it will end at some point, and then confidence will will return gradually, and those those opportunities to prosper will return, hopefully sooner rather than later.
Can I just add something to that? I think Julie's point is quite right. The crisis is likely to come after the event. I think we will see a V-shaped recovery, which is good news. But because businesses are likely to have a lot more debt if they've taken advantage of the time to pay their crown debts, maybe a business interruption loan scheme, all those things have to be repaid. So you really do need, if you're a business owner, to be looking at 12 months forward. If I take advantage of these various schemes, is my future trading, even given a reasonable recovery, going to give us the cash to pay our past and current creditors going forwards?
Okay, well, that's some great advice there, I'm sure, and I hope all the attendees today will take all that on board. Time has beaten us, unfortunately. I'd like to say thank you to our panel, Begbies Traynor, and for supporting today's event. Thank you all for joining us, and good luck to you all over the coming weeks. Thanks very much.